Hello everybody, please have a seat. We will start now with a small video address from our guests in Ukraine. Please start.
Greetings to the distinguished audience, all participants of the international conference, our private investors, and thank you for the invitation to speak today. Ukraine is a country with enormous opportunities and a large market, which is located at arm's length from Austria. As of the beginning of 2023, Austrian investments in Ukraine totaled over 1.6 billion euros. This proves that all our combined efforts of the government, of Ukrainian and Austrian businesses are paying off. The most important thing I want to tell you today is that Ukraine can be and should be invested in. UkraineInvest is currently working on more than 30 projects worth more than 2.5 billion euros. The status of a candidate for EU membership and the need for reconstruction makes Ukraine attractive for foreign investors. To attract foreign direct investment, Ukraine has developed and implemented special regimes and incentives. The law of Ukraine on state support for investment projects with significant investments is in force in Ukraine and has been amended. The law has improved the system of investment incentives, and now we have expanded access to them by reducing the requirement for the threshold of investment from 20 million euros to 12 million euros, and the number of jobs from 80 to 50 or even 10, depending on the project, allowing investments to be launched before signing a special investment agreement with the state, and also introducing forms of support, new ways of support, and many other important changes. In addition to comprehensive investment incentive regimes, Ukraine also offers investors a wide range of incentives aimed at investing in priority sectors of economy, including special tax regime for the IT industry, temporary tax and customs incentives for investments in the production of electric vehicles, aircraft, and also financial support for agri-processing in Ukraine. We have partners that are ready to consider issuing war risk insurance programs for investment projects in Ukraine. These are multilateral investment guarantees agencies, MIGA, a member of the World Bank, US Development Finance Corporation, German government program, and others. These programs already work, and they have been issued for some projects in Ukraine. We also initiated a series of events called Fit for Ukraine. These are events of UkraineInvest, where we present deep analytical materials for investors, showcasing not only the damage that was caused, but also opportunities for investment in Ukraine right now. Meaning, how many products you can produce in Ukraine and what size of market will be, and what will be the demand not only in Ukraine but around Ukraine. Activity in different sectors. Key ones are, of course, manufacturing and construction materials, agro-processing, and logistics. These are the most active in terms of specific investment projects that started after the 24th of February 2022. Currently, almost 200 companies from Austria operate in Ukraine. 25 of them are production facilities employing more than 20,000 people. The largest Austrian investors include Kronospan, one of the largest producers of wood-based sheet materials, which invested almost 1 billion euros in plants in Rivne and Lutsk over the past 15 years. Also pulp mill in Ukrainka, Kiev region, that produces packaging materials and cardboard. It employs almost 2,500 people. The Kiev cardboard and paper mill is one of the largest cardboard and paper production companies in Europe. It is one of the largest Austrian investments in Ukraine, about 300 million euros over the past 20 years. Another significant investment is the production of fruit juice concentrates and fruit fillers by Agrana Food. Since 1997, the company invested around 40 million euros in plants facilities and industrial area for growing fruit. Among other companies from Austria that operate in Ukraine are Raiffeisen Bank, Erste Bank, OMV Group, Strabag, Henkel, Voestalpine, Wienerberger, Lenzing, ST Group, Verbund, and others. So if you are interested in Ukraine, would like to be part of its economic transformation, let's work together. Please get in touch with UkraineInvest. We'll be happy to support you. I thank you for the attention and will look forward to further fruitful cooperation. Please get in touch with us. We'll be happy to support your project. I wish you a productive event.
Thank you very much for sending us this small address. And we have one representative from Ukraine already here. Very nice to have one person here. So if you have any personal questions or something like that, do not hesitate to contact me, and I will establish a contact to this person. The next address is from our sponsors, and we are very happy that she's here. Dr. Tatiana from the World Gold Council. So the floor is yours. Thank you very much. Maybe you go a little bit in the middle because the camera can see you then much better, if it's possible.
Thank you very much. Thank you very much for having me. My name is Tatiana Fitz. I'm Director for Central Banks and Public Policy at the World Gold Council. The World Gold Council is the gold market development organization for the industry. And we are an association. We have 33 members, which are the world's largest gold mining companies. And we work to improve the understanding of the gold market, to remove barriers to the market, both in terms of infrastructure and policies, and to improve trust in the market. Currently, one of our overarching objectives is to digitalize the market, to make it more integrated, more fungible, and more accessible. And I'll talk about it a little bit later. At the current juncture, at the global level, we are facing numerous risks and uncertainties. The geopolitical situation has been deteriorating rapidly. We have two wars. We have the war in Ukraine. We have an escalating conflict in the Middle East. There is a noticeable shift from globalization to regionalization with rising tensions between the US and China. There is a transition from the unipolar US dollar-based international monetary system towards a multi-currency system with not only the dollar but also other currencies such as the euro, obviously, and the renminbi playing the role of the key reserve currencies, at least depending on the regions. We have the expansion of the BRICS group and ongoing polarization between the southern and northern hemispheres. You may have seen a few weeks ago, following the BRICS summit, there was an announcement made that 40 countries expressed interest in joining the BRICS group. 6 already have joined, including Saudi Arabia, United Arab Emirates, and Argentina. So we have these changes happening now. Managing inflation is becoming more and more difficult, which results from inflationary demographics and aging populations with older generations spending more than saving, with increasing competition for talent, which drives wages, and uncertain impacts of decarbonization on prices. And finally, we are entering, or have already entered, the new era of digitalization. I think one of the colleagues earlier already mentioned central banks developing CBDC currencies, both wholesale and retail. We have both retail and institutional investors being more and more interested in tokenizing assets. And this applies to the gold market as well. So today I'd like to say a few words about gold as an investment, as a short introduction, and then I'll turn to the main part of my presentation regarding how the gold market may look in the future, in particular from the perspective of tokenizing gold. So the gold market is a global market. About 70% of the demand comes from the emerging markets, in particular China and India. 25% comes from the developed market. In Europe, it's mostly the German-speaking countries, Germany, Austria, and Switzerland, which are the largest investors. As you know, gold is not only an investment, but it's also a central bank reserve asset. It's a jewelry, and it's a technology component. And as a result of its multi-functionality, if I may say so, it has a dual nature, because during the times of expansion, the demand comes from the jewelry and technology sectors, while during the times of uncertainty, most of the demand comes from investors seeking to hedge the risks they are facing. In terms of central banks, over the last 10 years, central banks have been very active buyers of gold, on average purchasing 600 tons. Last year it was 1,000 tons. To give you a little bit of perspective, the Central Bank of Austria holds 280 tons. So last year's demand of 1,000 tons, is a big number. There are many misconceptions about gold, or how should I say it? The common conceptions include, among other things, that gold is not different from other commodities, that it's a tactical hedge only, that there are better ways to protect against inflation, and that it only preserves capital. So one could ask, okay, what's the role of gold in a portfolio then, if I need to consider issues such as liquidity risk or market volatility or capital preservation issues? If I may, I'd like to say a few words about gold's characteristics, such as in terms of returns, diversification, and liquidity. Just very quickly. So if you look at long-term returns on gold, they've been positive, no matter whether you look at the period of 20 years, 10 years, or 5 years. And they've been higher than many other assets, including emerging market equities, for example, or euro treasuries, or other commodities. If you look at gold's diversification properties, we can see that during the periods of expansion, gold is positively correlated with other assets, while during the periods of recession, this correlation is negative, so it has a positive impact on the risk-return characteristics of a portfolio. Furthermore, in terms of volatility, there are many other assets that are much more volatile than gold, starting from global equities via emerging market equities, private equity, other commodities. And finally, just one comment on gold's liquidity. Sometimes you may hear some investors being cautious of investing in gold because it's not liquid. And again, as I mentioned earlier, there are many assets that you would never say that might be less liquid than gold. And even if you look at the UK gilts, they are much less liquid than gold. If you take German bonds and UK gilts together as well, they are less liquid than gold. Yes. So now coming to the key part of my presentation. As I mentioned earlier, our objective as the World Gold Council is to improve the functioning of the gold market, and the digitalization of gold is one of our key objectives, focusing at making the gold market more integrated, more accessible, and more fungible. The tokenization of gold is one of the key aspects to this process, and I would like to say a few words about tokenizing gold specifically. But maybe if we can take one step back. Tokenization, as you may know, it's the process of issuing a digital representation of an asset on blockchain. So it's the process of creating a token on blockchain, token that represents an asset. You can tokenize various assets. Traditional tangible assets such as gold or real estate, financial assets such as fiat money, equities, bonds, or non-fungible assets such as, for example, digital art or intellectual property. In this case here, of course, we are talking about tokenizing gold. And again, the digital space, and I'm not using the word crypto because it has very negative connotations, and for the right reasons. So I prefer to use the word digital. And when you look at the digital market, there are numerous types of tokens, numerous types of digital assets, and this even applies to gold tokens as such, because you can have two types of gold tokens. You can have gold tokens which are fully backed by gold, 100% by gold. You have the direct ownership of gold, which is stored somewhere securely in a vault. And you can have synthetic gold tokens, which only trace the price of gold. And obviously, risks related to these two types of tokens are very different. Because in case of the fully backed gold tokens, you don't have the counterparty risk because you have the direct ownership of the gold. It's not a financial claim against the issuer of the token. You have no leverage risk. You have no asset liability mismatch risk. You have no maturity mismatch risk. Cyber security risks are also limited because of the physical nature of gold. It's more difficult to move gold between locations because it's a physical asset. So if needs to be, a transaction can be frozen. So what I want to say is that when you look at digital assets, there are different types of digital assets, and there are also different types of digital gold tokens, which are determined by the different types of risks that they bear. Yes, so from the perspective of the market, one could ask what the benefits of tokenization are. And here, I think one could group them into three buckets. The first one is efficiency gains. So we have peer-to-peer transactions. So on blockchain, all transactions happen between participants of the network directly. So this means that there are no intermediaries needed, which reduces costs, which makes the transactions faster. So we have this atomic settlement, which is instant settlement of transactions between partners. We have more accurate pricing because we have more market stakeholders and transactions being settled in the real time. So these are the efficiency gains. In terms of the investor base, we have a widened pool of investors. First of all, because of the fractionalized ownership. The fractionalized ownership means that no matter what your budget is, you can invest in a token, because it is like on blockchain, you can buy as little or as much as you want. So investors with smaller budgets can also invest in gold. Just to give you an example, and maybe not even directly related to gold as such, but if you are an investor, let's say somewhere in Philippines and you have a small budget and you want to invest in real estate on Wall Street, you can do that if that estate is tokenized. And the same applies, of course, to gold. So no matter what your budget is, you can invest in this asset. You have 24/7 access to the market. So no matter in what time zone you are, you can trade with anyone around the world. We have simplified cross-border transactions. So all these features have a positive impact on the investors pool and the investor space. And finally, the third group of benefits related to tokenization of assets, in our case, tokenization of gold, as part of the digitalization of the gold market, is expanded usability of gold. So gold can be used in other ways in ways that go beyond its traditional ways or functions, which is gold as an investment or gold as a store of value. Gold can be used in collateral in investment financing more easily. It can be used as a collateral in interbank lending. It can be used as a means of payment. So we have this expanded functionality of gold, which again will have a positive impact on the market. Yes. So finally, what the impact on the market is. So first of all, probably I would mention liquidity. So we have more investors, more transactions happening in the real time. So the market becomes deeper and more liquid. Second, the market becomes more accessible and inclusive because you can access the market from various jurisdictions, from various parts of the world during various time zones. Investors with different investment budgets can access the market more easily as well. So there is this element of inclusivity here as well. And finally, the market becomes much more transparent. 2 weeks ago, our members, the World Gold Council's members, they committed to providing all information about the gold, all the gold that they produce to refineries. So this information will then be transmitted to all gold, to gold tokens that would be traded on blockchain. And then we would have this like end-to-end transparency, end-to-end sourcing transparency with every transaction being traceable to the very source. So this will allow for greater market transparency. So in terms of the main benefits, it's liquidity, accessibility, and transparency. Thank you very much.
So thank you, Tatiana, for giving us a small impression on gold and the digitalization of gold, which is quite interesting in our point of view.